To invest with Ray Dalio's hedge fund, you need to have over $200,000 in annual income and over $1 million in investable assets, and with some firms, over 10. Ray Dalio and the Pure Alpha 2 hedge fund outperformed in a weak market environment in 2022, posting an impressive 6% gain through early December, while the rest of the market was still in freefall. Ray Dalio's net worth is $19.1 billion. He is the 32nd richest man in America. With his retirement from Bridgewater Associates, he will be paid out billions more. So just how does this Queens, New York native, born to middle-class jazz musician father and homemaker mother, C student, retire with such immense wealth? Let's dive in and learn how Ray Dalio evolved into the world's largest and well-known hedge fund manager, and learn his secrets. Raymond Thomas Dalio grew up just like many others who were born into the middle class of America in the 1950s, working odd jobs as a child like mowing lawns, shoveling snow, and delivering newspapers. At the age of 12, he got a job at the local golf course caddying. There, he caught the Wall Street bug of the golf course chatter. Unfamiliar with businesses and stock prices, he went for a company that he knew something about that was under $5, Northeast Airlines. It was then he experienced his first taste of investment success. His then $300 of savings, which he invested, tripled to $900. This started off his investing journey. By the time he was in high school, he had already amassed a sizable investment portfolio. But it wasn't until 1975 Dalio started Bridgewater Associates, which was a commodity consultancy firm in his two-bedroom apartment, that really began his journey in the real world of finance. This time though, he wasn't 12. He had just graduated with his MBA and got married to his wife, Barbara. At his company, Bridgewater, Ray believed that the cause and effect relationship could predict every element in business. When it came to commodity trading, Ray's favorite thing to trade, this type of relationship allowed Dalio and Bridgewater to predict the time and quantity of goods coming to market in a way that other analysts would miss. This superior level of analysis led Ray to some early success. A knack for trading and an MBA from Harvard were definitely coming in handy for this young entrepreneur. With a solid track record, starting from just 12 years old, nothing could stop this Wall Street 30-year-old family man. Things were looking up for Dalio, and in 1981, there was some severe volatility in the stock market. Using his superior level of data analytics, Dalio had predicted that there would be a market crash in 1982. He stated publicly with confidence that the stock market would crash and that his apartment, startup, Bridgewater, and himself would be positioned for such an event in the very near future, taking massive bets by shorting the market. Instead though, stocks entered a massive long-term bull market in the 1980s, proving Dalio dead wrong. Publicly humiliated and privately destroyed, Ray Dalio had to lay off all but one of his employees, himself. To this day, he is still shocked and embarrassed at how arrogant and totally confident he was in a totally incorrect view. How could someone with a family let one bad bet erase all of his good ones? With his wife and 4 sons relying on him for financial support, he had to humble himself and ask his father to borrow $4,000 just to pay his bills. Dalio even wrestled with the idea of putting on a suit and tie and commuting to work for someone else, giving up the American dream of owning his own business and hanging up his entrepreneur hat. Lessons like this have taught Ray to truly understand the relationship between risk and reward. Investors in his funds are not just people looking to make money, but also looking to protect their money. This prompted him to research, write, and share the principles for success, which document the trials and tribulations of his life. Nowadays, Dalio uses a quantitative investment method to identify new investments while avoiding unrealistic historical models that sometimes give false hope to other investment managers. Dalio's goal is to structure portfolios with uncorrelated investment returns based on risk allocations rather than asset allocations. Private investors can rarely invest in Dalio's holdings, so let's take a peek at what this top-tier seasoned investor keeps in his pure Alpha 2 fund. Coming in on top is iShares Core S&P 500 ETF, ticker symbol IVV. This is good news for the bulls out there. Ray is putting a majority, or about 4.3% of his portfolio, into the index. In other words, he thinks the market is likely to come back in 2023. His next big holding is Procter & Gamble, ticker symbol PG. This is their biggest investment in one company. So far though, in 2023, Procter & Gamble stock has not done as well as others. It has actually gone down by almost 9% since the beginning of the year. When the stock market is uncertain, people usually like to invest in companies that sell things people will always need, like Procter & Gamble does. In the last 3 months of 2022, Procter & Gamble's revenue went down a little and they made less money. Bridgewater owns almost 5 million shares of Procter & Gamble stock, which is worth more than $757 million. And with the stock down this much, now might be a great time to pick up some Procter & Gamble shares if you think that buying a company that sells things people will always need is a good idea. Next on our list of Bridgewater's portfolio is the iShares Core MSCI Emerging Markets ETF, ticker symbol IEMG. In 2022, Bridgewater decided that the risks of directly investing in some Chinese companies were too high. So they sold their investments in Alibaba Group Holdings, JD.com, Bilibili, and NetEase. And instead, they're investing in the IEMG fund, which has companies from a lot of different countries, including China. But with China, they only have about 28% exposure. In the last 3 months of 2022, Bridgewater did sell some of their shares in the IEMG fund, but they still own more than 14.5 million shares worth about $679.6 million. Next on our list is Johnson & Johnson, ticker symbol JNJ. Ray Dalio first started buying Johnson & Johnson at the initial US COVID-19 outbreak in the first quarter of 2020. With the company's plan to spin off its consumer business into another company could be bullish news for Johnson & Johnson. Bridgewater did sell about 1.14 million shares of their position in 2022, but still hold on to about $630 million worth of this blue-chip global pharmaceutical giant. Next on our list, we have PepsiCo Inc., ticker symbol PEP. Like other defensive stocks that people buy when fear is high, PepsiCo shares have lagged the S&P 500 so far in 2023 with year-to-date losses. Dalio has owned PepsiCo shares since the first quarter of 2020, but he reduced his shares by about 24% in the fourth quarter. Bridgewater still holds about 3.02 million shares of PepsiCo stock worth more than $545.6 million. Next on our list, and another way that Ray plays China, is Vanguard FTSE Emerging Markets ETF, ticker symbol VWO. This fund has a larger holdings in areas such as China, Taiwan, and Brazil. Compared to the other emerging market fund on the list, VWO is very risky due to the Chinese and Taiwanese stock that make up nearly 44% of the fund's holdings. But as Ray learned, risk comes with reward, and he feels that the reward from the lifting of China's COVID-19 restrictions in 2023 are worth the risk. Bridgewater sold about 6% of its VWO fund shares in the fourth quarter of 2022, but the firm still holds 13.8 million shares, worth roughly $539 million. Next on our list is Coca-Cola, ticker symbol KO. With Dalio's risk-averse style, he rarely puts all his eggs in one basket. In addition to his large stake in PepsiCo, he also owns their competitor, Coca-Cola. Coca-Cola has also been a top long-term holding of fellow billionaire and Berkshire Hathaway CEO Warren Buffett, putting Dalio in good company. Bridgewater holds roughly 8.4 million shares of Coca-Cola stock worth more than $535 million. Next on our list, we have the SPDR S&P 500 ETF, ticker symbol SPY. Now, the SPY version of the S&P 500 fund is very similar to the first fund we talked about, IVV, except it's issued by State Street. The fund has a low 0.09% expense ratio and plenty of liquidity. Likely the only reason Dalio owns both SPY and IVV is to diversify his exposure to the S&P 500. Here's the differences between the top holdings of the two different funds. Dalio reduced his SPY stake by 6% in the fourth quarter, selling about 89,000 shares. Bridgewater now owns 1.37 million shares of the SPY fund, worth about $525.5 million. And last on our list is Walmart, ticker symbol WMT. Walmart may have had their struggles with inventory management and supply chain last year, but their business and stock have performed relatively well in 2022. Walmart is Dalio's largest bet on a discount retailer, but like with Pepsi and Coke, he also holds stakes in competitors Target and Costco. Bridgewater now owns about 3.4 million shares of Walmart stock, worth more than $482 million. Even though Ray Dalio stepped down from Bridgewater, he's still very active with them and with the investment community. If you want to learn more about Ray Dalio and all of his contributions, be sure to subscribe, as we'll be diving into more inspirational stories from famous investors like Ray soon on the channel. Let's hope we can learn from his seemingly endless body of knowledge and stay inspired.